And welcome. It's Mary Ellen McGonagle here with your Friday afternoon MEM Edge show. And this is the show where we bring you where the action is in the broader markets. Another very interesting week here. First up, I am going to share with you some of the headline news that drove price action last week. From there, we will go ahead and take a look at these broader markets where it's some pretty critical positions. We'll look at the Nasdaq and the S&P 500 and one additional chart that I find very, very interesting. And beyond that, we'll take a look behind the scenes. Where is sector rotation shaping up, taking place? Sub-industry group movement, lots on the move here as we move forward with the markets. So let's go ahead, not waste a minute. I'll share with you some of those news last week. Things really got interesting more toward the end of the week, but in the beginning of the week, we did see consumer confidence dropping to a 6-month low, and all about inflation fears that in turn did push some retail and consumer cyclical stocks lower. We also did get news on Wednesday about private job openings, and there was a rise in that, but we also saw Chicago business activity tumble to a 6-month low. So in the beginning of the week, things were rather myopic, weak looking. We did start the week on a weak note, but as we progressed, there were several speeches from some of the Federal Reserve presidents, and the talk there was all about pushing an interest rate hike off the table in their June mid-meeting that's coming up. And that's generally good news, certainly for growth stocks. We did see construction spending and hiring continue to remain elevated, so that housing market is still quite vibrant. However, the big news this week was the fact that we did have the deal on that ceiling for the debt, and that was certainly good news to get that uncertainty behind us. And even more impactful was today's employment numbers. We did see the May employment numbers show a very sharp rise in new jobs, over 330,000 new jobs created. Normally, that would be very negative for the markets. However, we did also get news that wage increases were very modest. So a really golden report, if I may, in the sense that those job openings show that we are not potentially going to get a hard landing or a heavy recession. It is showing growth, and that growth will translate into corporate profits and be generally good. Also, with the modest increase in wages, this is what the Federal Reserve wants. They want wage increases to decline so that inflation levels will decline. So in turn, today we experienced a very broad-based rally, a lot in the way of cyclicals on the move, those industrials, basic materials, financials. We're going to get into all of that today. And then next week, rather light on the economic calendar front. Sector service PMI numbers. We're going to get factory orders and consumer credit. But let's dive in at this time, take a look at these markets and what's on the move. And here we are with a daily price chart of the S&P 500 and a couple of profiles or areas that we can pay attention to here is the fact that the S&P 500 midweek did move back above this key area of resistance here at 4,200. We pulled back from that. However, today's 1.5% rally did in fact push the S&P 500 further above that key area of resistance. And those of you that are subscribers to my MEM Edge report, we've been on the lookout for a more sustained move above resistance. That's going to give us confidence that this near-term uptrend has legs. So keep an eye out for that. We do also have positive momentum with that RSI above 50 and trending higher. Likewise with the stochastics, a faster moving momentum indicator above 50, trending higher. And this all is very good news, particularly because we're getting pretty decent volume on these rally days. So super good news there. I do also want to share a view of the Nasdaq composite as well. Both indexes were up 2% for the week. We have another very longer key term area here on upside resistance, 13200. And today, the Nasdaq did break above that secondary area of upside resistance. So good news there. We can see that it's just inching above that. Again, we do want to see a more sustained move to give us confidence. However, net, very constructive price action in both of these broader market indices. Now, I talked about today that rally into those cyclical areas that fare well in a period of anticipated economic growth instead of weakness. And what I did want to share with you is a view of the equal weighted S&P 500. And the primary reason here is, despite the uptick in the broader markets, this equal weighted version of the S&P has been in a generally declining mode. And a lot of that is because the movement to the upside in the broader markets has been very focused in those mega cap FANG stocks and other areas of technology. Today's rally in those cyclical areas did serve to push this equal weighted index up above these shorter term moving averages, RSI positive. We're not getting a whole lot of momentum shift here in the MACD. It will take more than one day. However, of note, we can go back to this October into December rally and then the rally in the beginning of the year. So we've had other periods where the markets have been broad in their upside movement, but certainly this is good news. This is what a lot of investors have been harping about, is the fact that we have a very narrow leadership. So day one of a potential continuing broadening out. We will, of course, want to keep a very close eye on that. So from here, let's take a look at those S&P 500, the 11 sectors. I've added an RSI indicator. We're sorting it in descending order. And this is a 2-month daily price chart view, strength to weakness. And it's not going to be whippy. It's going to be a rather a metric of these indexes or these sectors as they come into strength or weakness. So technology still up here at the forefront. It did underperform for the week, up 1.3 versus the broader market's 2% gain. However, it is retaining its leadership status here. I'm going to go ahead and pull up a weekly chart and share with you that we are very, very close to really eclipsing this late 2021 peak that we saw in technology. So still, we did not outperform so much this week, but it is showing considerable overall strength. And then communication services, this will be have quite a bit to do with Meta and Amazon, both stocks outperforming. Also, as we move on, now this was a big mover today, and that is consumer discretionary. A lot of these retailers, it was up 2.5% on the day. And this is that cyclicality that I mentioned. We did see a pronounced move into select consumer discretionary names. Amazon, Tesla, big mover this week, up over 11%. And a lot of those gains did come into play today. So as we move through, taking a look at some of these other sectors of note was the fact that financials, big move, up over 2% on the day. And these financials also very cyclical in nature. There also was an article out about the earnings reports among some of these banks. And we'll get into that. I'll share with you where we are as it relates to a potential move back into those banking stocks. But let's go ahead and progress further as it relates to these industry groupings, because a lot of these sectors were on the move today, but still not yet reversing their downtrends. This is healthcare XLV, a nice 3-day rally that is pushed this index back up above that 200-day, but we're not quite in positive territory yet. And as it relates to basic materials, another highly cyclical area, up over 3.3%. You can see that gap up that took place today on the employment news. So let's go ahead from here. We're going to drill down a little bit further, and I will share with you some of the underlying sub-industry groupings here in the markets. So from here, what I'll go ahead and do is share with you how you can, in fact, get in front of these 2-month daily price chart views of different areas. Now, this is what's called the candle glance, and it already is populated by several areas as it relates to broader markets. But from my work, I like to add select ETFs that are growth oriented, and then more importantly, just really insightful and relevant as it relates to keeping you in front of where the movement is in the markets. So I did populate it with those tickers for the ETFs. And I'm going to add that RSI and sort it in descending order. And here we are. We can take a look. IGB is up here at the forefront. This is the technology software ETF, and it was up 2% in line with the broader markets, but certainly keeping that rally very much in play. This particular area does fare well, certainly as most corporate entities will, when there is the concept or the idea of a broadening out in the economy. But it's also very, very insensitive to any increase in interest rates. However, we have seen this group continue to trend higher, most of it on earnings and positive outlooks among many of these underlying software companies. So good news there, one of the drivers for technology. Next up is semiconductors. They had a fantastic week last week with NVIDIA's earnings propelling the group higher. A little bit of a pullback there this week, down 1.3%. I'll share with you a couple of the names in here that are on the move with this group and what to be on the lookout for going forward. Net, it is still retaining most of last week's gains and looking quite constructive for these semiconductors, certainly AI related stocks. So let's go ahead and move forward. I mentioned financials and banking, and here we are. This is KRE, the regional banking ETF. And you can see it closed today up above this 50-day simple moving average. And this is what I have been on the lookout for. I will mark this up. And also beyond this, however, there are not a ton of names that are also exhibiting this, but I will share with you several of the more certainly well-known names. But what we are looking at here is the fact that we are seeing higher lows taking place here. I'm just going to mark this up very quickly here. And then beyond that, we do have today's move above the 50-day simple moving average. And that's good news. I will need to see a little bit more from my work before jumping in to these regional banks. And first up is a more advanced move above that 50-day, eventually wanting to pull that moving average into an uptrend so that it can act as support. But let's take a look at some of these other metrics that have turned positive. RSI now up above that 50 in positive territory. MACD almost not quite there. So we are seeing a nice firming up in these bank stocks. Again, this is a cyclical area that will fare well with the backdrop of a potential raising of the economic growth. So keep an eye there. I'll share with you some names. And then moving along, I did want to share with you some other areas that picked up a little bit today. Biotech's up almost 2%, still not quite yet reversing this downtrend. This is all about that IRA bill and reduced pricing for some of the drugs that these companies are producing. So that's a view certainly of the markets and the underlying industry groups. From here, a lot that I do want to share with you relative to these different areas. So first up, I'm going to go ahead over here and take another look at KRE, this regional banking ETF. And then we'll begin by taking a look at some of these bigger bank names that are also experiencing similar downtrend reversal characteristics. And really, this is all about helping you get together your watch list so that when, for me, I will need to see a little more in the way of a pronounced uptrend, but we can see higher lows, breaks above moving averages. And if we can get this green 10-day moving average up above the 50, that would indicate a golden cross. We do have positive momentum shaping up there as well. JP Morgan, I'm sure you've been reading about this company. They did take over the collapsed bank up in San Francisco, but they have other characteristics that are propelling them higher. And most importantly from my work is the fact that they didn't experience such a pronounced downtrend as other areas. So we can see JPM poised to land up above here. And if we get that, we'll see a nice 1 month base breakout, nice high volume on today's rally. We can take a look at just a couple of other names here, and it is mostly these larger regional banks that are faring better as it relates to breaking up above resistance. A little early here. This is COMPQ, one last name, and then we can move on to taking a look at some of these other areas. This is Zion's Bancorp, ZION, and the attraction here is the fact that they did turn positive prior to the group. So oftentimes those names that are what I call first out of the gate will go on to lead you higher. So good examples there. From here, what we can do is take a look at IWM. I did not share that with you, but small cap stocks were up 3.5% today. Now, again, very early in a potential rally phase, but of note, super high volume. Of course, the Russell 2000 does have a heavy weighting in those regional banks, but there are other areas in small cap. Small caps companies do fare well in a period of expanding economy. So a couple of factors. Again, I'm not quite ready to jump in with both feet, but it is certainly something of note. From here, I can share with you just a couple of names that are in that small cap area that are showing signs of vibrancy, and they are doing so with a backdrop that makes sense. So this is Redfin. I talked about that housing area that is on the move with this potential economic growth, and Redfin does provide a service that actually is similar to Zillow, where you can buy and sell homes. They provide listing, and for a period there, they did have a service where they would purchase your home. In fact, it may even still be there, sight unseen. So they do have several facets of potential growth. And from here, I'm not finding my list. Oh, here we are. SGRY. This is a smaller surgical center stock, medical related. You can see the gap up today, poised to experience a nice space breakout. I really wanted to show you names within different sectors. ATI is a steel related stock. I talked about basic materials names on the move. You can see the gap up above key resistance, your momentum shift into positive territory. Last name here, consumer staples. I may have mentioned this name in the past. It's quite the grower. This is Celsius Holdings, a carbonated high energy beverage that is super popular. Here's the gap up on earnings, pulled back with the downtrend that took place in staples names, found support at this 21-day simple moving average, and then today experienced a base breakout to new highs. So from here, what I also wanted to share with you is this move. Let's take a look at XLI. This is a cyclical area. Here we are with today's 3% gain, super big volume. So from here, I'm going to share with you a couple of stocks, and then beyond that, we are going to take a look at an ETF that would be a good way to play this potential move into cyclicals. This is TEX. The company announced very strong earnings back here, but then was depressed due to a move into higher growth tech names away from these cyclicals. Today, nice gap up, big volume, positive momentum. We can take a look at MTW, which is another industrial name that also experienced strong earnings recently, but it was not until this week that we are seeing a pronounced uptrend, or certainly maybe a downtrend reversal shaping up. This is Manitowoc, positive momentum indicators there. And I'll share with you one last name that's well known in the industrial space, and that is Ingersoll Rand. And what you'll find among these industrials that are on the move, they are either related to construction, home building. In the case of IR, it's all about providing, among other products, robotics for manufacturing, and that's been a hot spot. We can see this move to a nice base breakout, positive momentum characteristics taking place there. Last up here is an ETF that is all about industrial stocks, PAVE. It's the Infrastructure Development ETF. little bit waffly here. We did break above this back and fill formation. And again, a way to take advantage of the move into industrials without getting really stock selective. From here, I'm going to share with you a view of another ETF, and this is a way to participate into the move into Homebuilders, XBH. You can see that it did pull back here. I do have a home builder on my MEM Edge suggested holdings list that is experiencing a nice week, but it did also not this pronounced, but there was a pullback in home builders because mortgage rates got up to 7.4%. So certainly quite a bit higher than that 3.5% range that was in play for quite some time. But today's news, we did see this big 4% gain in the overall grouping. And as opposed to looking at individual stocks, you can, here we are with Pulte, for instance, up 3%. You can see that the ETF was actually up higher. It's incorporating all of the names. This is Lennar, another home builder. And then from here, we can pivot over into building related stocks. This is also going to be industrial. Actually, that's a bit of an advance there, but let's take a look at a more staid chart, if I may. And this is ROCK, R-O-C-K, again, construction related, pulled back, but we did see this nice sharp gain today with the momentum in positive territory. And then another company that recently reported strong earnings, the chart is really quite a lot in the way of back and fill. This is AMWD, and quite simply, they provide kitchen cabinets, and they came out with super strong earnings. And it looks exaggerated, but it pulled back to this 10-day simple moving average and continuing to advance. They had numbers that were well above estimates. From here, I am going to share with you in the Dow one bellwether name that really kind of told the story as it relates to this move into cyclicals, and that is Caterpillar, CAT. And you can see today 8.4%. Very high volume, a move of this RSI up into positive territory. What I like to do when I see this type of price action in a given stock is take a look at historical precedent. You're on the lookout for this pronounced downtrend to be reversing. We're getting that nice high volume. We're getting that momentum shift here with that RSI. MACD, not quite positive, but we did have that crossover. So from here, what you can do quite simply is using precedents, just take a look at this downtrend reversal. Now, I would wait for a move above that 200, which we did get here already. But in essence, you are using this prior period as your guide in the sense that your RSI turned positive. We did have that nice move here. We're getting nice heavy volume. And once that MACD got into positive territory, you can see that it did foretell a rather lengthy advance. We had this period here of sideways price action. This is December. That was very typical of the broader markets, but then a renewed uptrend here into February. So on the lookout for a continuation potential rally. Keep this backdrop here in the back of your mind. You want that momentum to stay in positive territory, those momentum signals, and then the price action finding support at that upward trending moving average. Another name in the Dow, because the Dow was a big mover today, that I wanted to share with you is Boeing, BA, another heavyweight name. But let's take a look, because the stock is poised to break out of a nice base formation. And we can see here, see if I can get my drawing skills. Actually, I think you can see what I'm seeing there with the fact that the stock is very close to approaching this April high. And we can see a little bit more of an advance would have us breaking out of this nice base. We can see nice volume characteristics on the rally days. That's what you want to see, indicating accumulation. MACD just dipping into positive territory, likewise with that RSI. And so one last name in this Dow, again, kind of heavy weighting on this move into the cyclicals, Those of you that have not already, you will want to subscribe to my MEM Edge report so that I will get totally into those semiconductors and what to be on the lookout for. I did run out of time today, but this is American Express, and we are seeing other payment processors on the move higher. And that's it for this week. Everyone, have a fantastic weekend. I'm going to look for you again here next Friday.